Good morning and welcome to this week's News Roundup. In the next 10 minutes, we'll cover the most significant U.S. financial, world, and political stories from the past 7 days, spanning May 12th to May 18th, 2025. Let's dive in, starting with U.S. financial news. U.S. financial news. The biggest financial story this week is the U.S. China trade truce, a temporary 90-day pause on punitive tariffs that has sent ripples through global markets. On May 12th, following high-stakes talks in Geneva, Switzerland, the U.S. and China agreed to slash tariffs significantly. U.S. tariffs on Chinese imports dropped from 145% to 30%, while China reduced its levies on U.S. goods from 125% to 10%. This deal, described as constructive by U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier Lifeng, also includes China lifting export restrictions on rare earth minerals and magnets critical for high-tech manufacturing. The agreement aims to stabilize a trade relationship that had disrupted nearly $600 billion in two-way commerce, easing fears of a global recession. Markets reacted swiftly. On May 12th, the S&P 500 surged over 3%, with the Nasdaq 100 entering bull market territory after a 20% recovery from its April lows. The Dow Jones Industrial Average gained 271.69 points on May 16th, closing at 42,322.75, while the S&P 500 rose 0.41% to 5,916.93. Consumer discretionary stocks, like Carnival and Amazon, rallied over 7%, reflecting optimism about holiday shopping inventories. However, the Nasdaq dipped 0.18% on May 16th, partly due to Apple's stock declining after President Trump criticized its manufacturing shift to India. Despite the rally, uncertainty lingers. The 90-day pause is seen as too short by some, with China's Global Times calling it insufficient for long-term stability. Retailers like Walmart warned of potential price hikes due to remaining tariffs, with CEO Doug McMillon urging the administration to eliminate them entirely to avoid impacting general merchandise costs. Additionally, gold prices hit record highs as investors hedged against tariff-driven volatility, with Los Angeles jewelry merchants reporting a surge in customers selling or buying gold as a safe asset. Another financial headline: consumer sentiment weakened amid tariff concerns, with 12-month inflation expectations spiking to 7.3%, the highest since November 1981. Meanwhile, April retail sales grew by just 0.1%, driven by restaurant spending, suggesting cautious consumer behavior. The U.S. dollar rose 0.36% on May 16th, buoyed by the trade deal and import price rebounds, marking its fourth straight weekly gain. Critically, while the trade truce has boosted markets, it lacks meaningful concessions beyond tariff reductions, and negotiations could falter if core issues, like the U.S.'s $295 billion trade deficit with China, remain unresolved. Investors are cautiously optimistic but braced for volatility. World news: on the global stage, the U.S. China tariff deal dominated headlines, but other stories shaped the week. The trade truce not only lifted U.S. markets but also spurred global stock rallies, with investors hopeful that reduced trade tensions could avert a broader economic slowdown. However, the deal's temporary nature and lack of detail, neither side released specifics beyond a joint statement, kept analysts cautious. Chinese officials emphasized global equity and rejected proposals compromising their economic model, signaling tough talks ahead. Elsewhere, economic policy uncertainty reached historic highs, as noted by Federal Reserve Governor Adriana Kugler in a May 12th speech in Ireland. She highlighted uncertainty as a recurring theme in the Fed's Beige Book, driven by global trade shifts and tariff policies. This uncertainty is affecting households, businesses, and policymakers worldwide, with implications for inflation and employment. In Japan, Honda Motors stock plummeted after the company projected significant profit and sales losses due to U.S. tariffs, underscoring the broader impact of U.S. trade policies on allied economies. Japanese Finance Minister Katsunobu Kato signaled intent to discuss foreign exchange issues with the U.S., reflecting concerns about the strengthening dollar. In the UK, a U.S.-UK trade deal announced last week was hailed as a win, with Prime Minister Keir Starmer and President Trump calling it historic. However, the Financial Times noted its limited scope, leaving the UK worse off than before Trump's tariff hikes. The deal helped the UK avoid the worst of Trump's trade policies, but economic challenges persist. On a somber note, regional instability in undisclosed regions led to the temporary shutdown of drilling operations by an unnamed company, highlighting how geopolitical tensions continue to disrupt global supply chains. While not directly tied to a specific event this week, such incidents underscore the fragile state of global markets. Political news in U.S. politics. President Donald Trump's trade policies remained a lightning rod. The tariff truce with China was touted as a victory, with Trump posting on social media about great progress toward a potential total reset. However, critics argue the deal merely rolls back his earlier tariff hikes from April 2nd, dubbed Liberation Day, without addressing structural trade issues. The administration's optimistic tone, led by Treasury Secretary Bessent, contrasts with Beijing's measured response, which emphasized protecting its core principles. Domestically, Trump's tariff rhetoric intensified. On May 18th, he urged Walmart to eat the tariffs to avoid passing costs to consumers and pushed for Federal Reserve rate cuts sooner than later, signaling pressure on monetary policy. These moves sparked debate, with some analysts warning of inflationary risks and others seeing them as bullish for growth. A significant political development was Moody's historic downgrade of the U.S. credit rating, cited in posts on X. This unprecedented move, attributed to a deepening deficit crisis, triggered market warnings and raised questions about fiscal sustainability. While unconfirmed by primary sources, the downgrade aligns with concerns about rising inflation expectations and tariff-driven volatility. The U.S. Supreme Court also made headlines, reportedly weighing Trump's bid to restrict birthright citizenship, a controversial proposal that could reshape immigration policy. Additionally, a 7-2 SCOTUS ruling allegedly struck down Trump's deportation policies, though details remain sparse and unverified. These developments, if accurate, signal ongoing legal battles over Trump's immigration agenda. Finally, the Department of Justice is reportedly nearing indictments, possibly tied to political figures, and may drop charges against Boeing in exchange for a $444.5 million payment. These stories circulating on X lack corroboration, but reflect intense public interest in Trump's legal and political maneuvers. Conclusion: to wrap up, the past week was defined by the U.S. China trade truce, a fragile but market-lifting deal that eased global recession fears but left unresolved tensions. U.S. markets rallied, yet consumer sentiment and retail giants like Walmart flagged inflationary risks. Globally, economic uncertainty and regional instability underscored the stakes of trade policies, while in U.S. politics, Trump's tariff push, a historic credit downgrade, and Supreme Court rulings fueled debate. As we move forward, the durability of the trade truce and its economic fallout will remain critical to watch. Thank you for joining me. Stay informed, and I'll see you next week.